get your feedback on how this went, what you'd like to see in future webinars and things, because we like to increase our communication with with our customers and provide content that's really valuable to you. I also want to just note that the content in this presentation is for informational purposes, right? This obviously is not direct advice for your specific situation, but it is intended to help point you in the right direction. There's nothing quite like a local expert like Mike Royle that we have here with us today, who's obviously also available to help out with issues, as is your attorneys and such. But even for us, on the capital finance side, we're regularly consulting with experts like Mike to make sure that we're applying the ever-changing PPP forgiveness and acceptance standards. So with that, I'll talk a little bit about the agenda that we have going on here today. So again, I'm Chris Atkins there on the right, and we have Mike Royle here with us. In terms of background, so Mike is an attorney. He works with C2FO Capital Finance to help businesses and lenders with matters surrounding corporate finance, working capital, and other general matters, including some regulatory stuff, as you're seeing here on on this webinar. He's been a really great resource, especially as he helped us with some of our legal documents and forms and things for how we operate C2FO Capital Finance. But then he's really been great since the pandemic hit in helping us digest the CARES Act and PPP, including this forgiveness. Again, my name is Chris Atkins. I'm the head of C2FO Capital Finance, which is intended to help customers of C2FO accelerate invoices that are outside of early pay, right? So outside of our core product offering. And happy to engage with anybody that has a need around that. I do want to just, in kind of kicking off the program here, I want to offer a little bit of praise for PPP, right? So I think most that are on this call have taken PPP funds. If you haven't, the window is still open, and it is a really great program. I think the only kind of stone to throw at PPP is that it was done so quickly that guidance still is coming out, and so we've seen some recent guidance which Mike has kept up with and we'll be able to explain today. And we'll all benefit from that. But obviously, things continue to change. The one benefit I will mention is that that leadership has been pretty clear that if you do something at a point, relying on guidance that's been given, you're okay to rely on that. And Mike will expand on that. But so I wouldn't be too afraid of the ever-changing nature of it, but more so seeing the opportunity it is and how wonderful of a program it is in a really tough time like this. So with that, I'd like to hand it over to Mike, who's got some prepared slides and discussion points, and then we'll open it up again for that Q&A. And just to be super clear, feel free, if Mike mentions something that kind of gives you buzzes a question in your head, feel free to go over to the Q&A or the chat and throw that in there to make sure that we get that answered. So and if he answers it, we'll just take that off the board. So with that, Mike, you with us, and can you take us through a few things?
Yes.
Great.
Yes, thanks, Chris, very much. Thanks, Chris. I assume everybody can hear me out there. We're going to talk about today. Everything's good?
Yeah, we got you. Thanks, Mike.
Okay. Let's start out with make sure we're talking about the same thing. You hear a lot, you read a lot in the press. There was the CARES Act for small business assistance, and inside that CARES Act is the Paycheck Protection Program, and I'll refer to that today as PPP. That's kind of where we're going to focus. I'm going to give you a little bit of a recap about, I break it down into three categories: eligibility, calculation of loan amount, and the forgiveness component. If you heard the earlier presentations of mine, we're going to focus today on the forgiveness component as modified by the Flexibility Act that just was enacted. But let's start back at the beginning. to make sure we have our terminology, we're all on the same page. Again, we're going to refer to it as the PPP loan program. You know, who is eligible to participate? It's small businesses, sole proprietors, independent contractors, self-employed entities, not-for-profit organizations, certain types of veterans organizations, and tribal organizations. The first test, you know, that you go through is, are you eligible for a PPP loan? Any small business under Section 3 of the Small Business Act qualifies. Prior to the enactment of the PPP, there was the SBA 7A program, and all this modifies temporarily during the covered period, which was now till December 31st, the SBA 7A program. If you recall, you would qualify your business if it met the definition of what is a small business by the based on revenue and the number of employees you had, based on your corresponding industry code that you received from your North American Industry Classification System. A lot of people will say the NAICS code. Every business has a code. You go to the code, you can look at see with your small business. If you didn't qualify for that, PPP made it simple. If you had 500 or less employees, using all the affiliation rules that we're normally accustomed to in the SBA. And then they went even a little bit further and said, okay, even if you have more than 500 employees, one of the exceptions to the 500 employee test was the alternative size test. If you had your maximum net worth was not more than $15 million as of March 27, 2020, and your average net income after federal income taxes, excluding the carry-over losses for the 2 years before the date of application, which has to be 2018 and 2019, that average net income is not more than 5 million. So there's a number of ways to qualify. Again, the SBA affiliation rules are complex and they do apply to this, but what the Congress is trying to do is to make it simple by doing the 500 or less employees, all this will stop after June 30th, and we'll go back to the old SBA rules. So I just want to keep that in mind. For calculation of your loan amount, there may be a few of you out there that haven't applied yet, but you basically do a 12-month look back. You want to make obviously your payroll costs looking back 12 months. You can either use your 2019 numbers, or you can go back 12 months from, right before your application. And obviously you want to use whichever one is the larger number. And then you figure out your average monthly payroll cost. So you figure out your total payroll cost, divide it by 12, multiply it by 2.5. And that's your loan amount as you calculate your loan amount. Essentially, that is payroll cost, which, as you know, in Section 1102 of the Act is a very broad definition. And all the guidance, like Chris mentioned, I would say 20 plus pieces of guidance since then that have been issued. So it's a very broad definition. So you'll calculate your loan amount. And at this point, we talk about eligibility and calculation of loan amount. I'm going to emphasize coming up also how important it is to document support for confirming that you're eligible and how you calculated your loan amount. Unfortunately, although it's not in the guidance or in the statute or basically anywhere, the burden of proof is on you. You're the borrower. Most of the people I'm speaking to today are borrowers. And there's some lenders out there, you can appreciate this. If you start to see guidance go through here, the theme is pretty common. Basically, the burden of proof is on the borrower to show that you are eligible, that you properly calculated your loan amount. And now we get to the forgiveness. I'm going to go generally through the forgiveness part of it now. One thing I want to stress is there's really 4 specific things you can use your PPP loan for, and it's going to be strictly interpreted. The payroll costs, the mortgage interest payments, that can be now for real property or personal property, but interest only, no principal, no prepayment amounts, etc. Your rent payments for leases that existed on February 15, 2020, utilities that you'd already signed up for, like your business was in operation on February 15, 2020, their utilities expenses, and you add those up during your covered period. We're going to get to that, right? But I'm going to start first with the payroll cost. Many of you recall that, and it's been written a lot in Wall Street Journal, et cetera, there was a 75% rule, and you had to spend 75% of your payroll costs on, 75% of your PPP loan on payroll costs. That number now, happily, has been reduced to 60%, and that makes it a little bit easier. We'll talk about it. It's a complex test. It's both a use test and a forgiveness test. So regardless whether you're seeking forgiveness or not, remember you have to use 60% of your PPP loan proceeds for payroll costs. Then we'll get to in a second on calculation of the forgiveness amount, which is different. That also has a 60% test. So the key takeaway for you right now is I want to make sure that sometimes people say, well, I don't really care that much about forgiveness, so I'm going to use the money for something else. The answer is don't do that. With respect to PPP loan proceeds, be very careful on what you use your proceeds for. And again, payroll costs, mortgage interest payments, rent payments, and utility costs. And we calculate this loan amount, or how we use the PPP proceeds. It initially was during an 8-week period. As many of you know, during the PPP Flexibility Act, which was passed, I believe, on June 5th, it was actually signed into law. The 8-week, a borrower now has the option of electing to change the 8-week period to a 24-week period. And we're going to get into that. It's not, just something you should automatically do. When it was first introduced, that's exactly what I thought. Well, everybody will just go to the 24-week election. And I'm going to talk about it in a second. Not so fast. I'm finding out that most of the people I'm consulting with, after we go through the analysis, they're electing to stay with the 8-week period, which kind of was surprising to me, but you've got to look at it, and every situation obviously is different, and you're going to have to evaluate it in both perspectives, and I'll again go through that just in a second. One of the initial levels of complexity was everyone was sold on the idea when it first came out in March 27th and April 2nd, when everybody started applying for the loan, that this debt was going to be forgiven. It was sold as something that was more or less going to automatically occur, and it was going to be forgiven tax-free, and it was just a wonderful thing. And then the regulations started coming out, and you started looking more carefully at the Section 1106 of the PPP Act, and you started to look at these formulas that limit the amount of forgiveness. Obviously, the maximum loan you can get is $10 million, so it's the maximum you could have forgiven would be $10 million plus any accrued interest on it. But there was a formula calculation that still applies. If any of you have out there have started working through the forgiveness application, what I'm giving you now is a narrative explanation of, as you go through the PPP's worksheets and schedules that are attached to the forgiveness application, you'll kind of follow along with me here. But what they're trying to do, it's a formula where the numerator is the FTEs, full-time equivalent employees, during the covered period, which would be either 8 weeks or 24 weeks. And what they're doing is figuring out the average number of FTEs on a monthly basis during this period. That would be your numerator. Then your denominator is the average FTEs during the period of, it looks like February 15th, 2019 to June 30th, 2019. So basically, but that June 30th date, we need to have some more guidance because it's not clear. That could be extended if we go to the 12/31 covered period date. So again, you can see where there's a lot of factors that go into whether you want to elect to go from 8 to 24. But again, your fraction is, we're comparing the FTEs during the covered period now to what they were last year. Obviously, you want your numerator larger than your denominator, because if it's greater than 1, that fraction is applied to your PPP loan amount. And obviously, if it's 1 or greater, then there's no forgiveness reduction in the forgiveness application. It works out mathematically through the schedule. It's similar to a simple tax return, but as you go through it, I'm advising people to print off the application that the SBA published a few weeks ago. Some lenders will have their own applications. I don't recommend that, but I would use the one that the SBA will ultimately provide. They have one out there now. There are some issues with it. They're making those technical corrections, but from a simple calculation of what you think you'll be entitled to for forgiveness, everybody assumes they're going to get 100%. I hope you do get 100%, but you're going to have to carefully document exactly what you spent the PPP loan proceeds on. You'll have to prove you complied with the 60% test, and then you'll go through these forgiveness formulas. There is also a reduction formula on the form that you see is if you reduce salaries by more than 25%, you could lose some ability to have your loan forgiven. Keeping in mind, it's not the end of the world if your loan is not forgiven. It is basically an unsecured loan. If you apply before June 5th, it's an unsecured loan payable in 24 months at 1% interest. For those that apply after June 5th, because of the PPP Flexibility Act, your maturity date can be extended to 5 years. And we'll talk about that in a little bit. So again, it's still at 1%. It's not the end of the world, but I do believe that you should make every effort possible to comply with the forgiveness provisions in order to achieve this benefit. Let me go now. I think I'm within my time frame here still. I want to talk a little bit, as I've mentioned, it's hard to go back and look at the old statute and then try to anticipate every change that has occurred. As Chris mentioned, there's over 25 different guidances and provisions that have been issued by the government and publications. Our firm I've published several things, but the key, as Chris pointed out, is that if you heard my presentations on April 2nd through April 10th, they're much different now in June than they were obviously just a few months ago. So things keep changing. So as you go through the process, try to, whomever's advising you on these issues, to keep you up to date. But the most recent, well, let's say there's been guidance last day, but the most significant recent was on June 5th when the president signed in what I'm referring to as the Paycheck Protection Program Flexibility Act of 2020. And as you go through the slides, you can start to see that what I'm getting here, the first thing I'm going to talk about is kind of generally under the forgiveness modifications, because that's kind of our theme today. I do want to focus on that. And the key there is, as I've mentioned to you before, you now have the election of changing your covered period, which begins on the date that your PPP loan funds, not the date of the loan documents, not the date it was approved by the SBA. There's all kinds of confusion out there. I think there is guidance, and I think it's normal in commercial lending, that your 8-week period, which is more or less a hard and fast rule, begins on the date the loan is funded. You can elect to extend the 8-week period to 24 weeks. I have situations where clients will say, well, I haven't used all my payroll before, I have another 3 or 4 weeks left, so I'm going to go ahead and extend it out and take advantage of the 24 weeks. And I would say, okay, that's fine, but you cannot apply for forgiveness until after the expiration of your covered period. So as many of you know, no one can apply for forgiveness until after June 30th. But if you have a recently funded PPP loan, and then you elect to go 24 months, you're extending your period in which you could apply for forgiveness, which again is not the end of the world, but if you just have to evaluate what is more important to you in your particular situation. With the 60-40 test versus the 75-25 test, it should be a little easier to meet the 60% test. So I'm hoping that what I'm finding out, I'm hoping, I guess, I'm just finding out through practical discussions with clients in various circumstances that many are electing to stick with the 8-week period. But if it works best for you, after you consider all the factors, obviously take advantage of the 24 weeks. A lot of people have been asking, how does this impact the alternative payroll covered period, the alternative covered period? And it's not really clear in the guidance. We were told that we're going to get more guidance on that, but I would assume that the alternative payroll concepts, which if you read the act, it clearly says that you must pay and incur payroll costs, rent expense, interest expense, utility in the covered period. It said paid and incurred. That really doesn't work in the real world. So they basically said, well, if you incur it during the covered period, which is now 8 or 24 weeks, but you pay it on the next, for instance, on payroll costs, if you incur payroll at the end of your 8-week period, but you actually don't pay it till the 9th or 10th week, because that's the normal payroll period, you could include that in your payroll costs. So I assume that same concept will be pushed forward on the 24-week option if you elect it, but it probably won't be that applicable because people should be able to spend all of their payroll costs based on the calculation we talked about earlier on the loan. You should be able to use that up easily within the 24-week period. Again, I just want to emphasize on the use of proceeds, the two-pronged test, the use and forgiveness component of that. I want to make sure that everybody understands that the key thing, if your loan is less than $2 million, I don't think you're going to receive a lot of scrutiny from the SBA. It's for loans basically above $2 million. You can plan on somebody asking you some questions about whether you're eligible, how'd you calculate your loan amount, and then carefully show us your documentation on why you think you're entitled to forgiveness. I would anticipate that most of the loans that are out there are below $2 million. They have a limited staff at the SBA, but you'll start to hear about situations where people have already been prosecuted in connection with fraudulent activity in connection with these types of loans. That's to be expected. Of course, no one on this call would be doing such a thing, but we just got to be careful to, again, document what you're doing, support your position, and that will almost always carry the day with the SBA. They don't have a lot of time to fuss around with people that are organized and are doing what they need to do. It's the people that show up with a shoebox full of receipts and say, hey, I'm entitled to forgiveness. I think you're making it difficult, one, for your lender to give it to you, and then you're making it difficult for the lender to receive the remittance of the forgiveness issues from the SBA. So my advice, the takeaway today, is to carefully document it, your eligibility, calculation of loan amount, and especially your forgiveness. And when you prepare that, which you can apply for after June 30th, make it easy for your lender to approve and grant you the forgiveness component tax-free. It's a wonderful thing, but you got to play by the rules and you got to do it correctly. We talked about there might be some. I get a lot of questions on the cliff requirements. Hey, what if I only do 59% of that? And there is guidance out there on that issue, and I don't think the Senate, and if you look carefully at the Senate as they're debating it, it is clear to me that they didn't intend it to be an all or nothing, like a cliff requirement. So I think there's some flexibility. Many borrowers, for various purposes, can't spend all the money on payroll because they're basically being put out of business. So there are situations that you can still take advantage of the forgiveness component, even if you have to overcome a lot of obstacles. For instance, a lot of small businesses are having trouble actually being able to operate their business, and but have had PPP loans. So the government's trying to make it as easy as possible to qualify for forgiveness, particularly on the small business loans. Obviously, we talked about limitations on forgiveness. We talked about the formula where the numerator was the FTEs, full-time employees. Earlier, if you heard one of my earlier seminars, there was basically a big discussion as what does FTE mean, because if you carefully read through the PPP Act, you will notice the definition of employee changes throughout the Act, and it finally comes at the end, comes up with this FTE concept, which wasn't defined, but you can look back in the IRS code and there was various definitions floating around. Basically, with the new guidance, when you're calculating your employees for the 500-person test, that's every full-time and part-time employee. It's a very broad definition. But when you're calculating your FTEs, which come into play when you're trying to determine whether you can take full advantage of the forgiveness component, the concept FTEs, if for every employee that works over 40 is counted as 1. For every employee that works less than 40 is counted as a half. So remember, in our formula, we were calculating the average monthly employees during the covered period, either 8 or 24, and you calculate that average again based, you'll have whatever your payroll period, let's say it's a 2-week period. How many employees do I have for this two-week period? X. Then you go to your next 2 week, how many do I have the next, and that average goes all the way through your covered period. And then you kind of calculate backwards to determine what is my monthly average when you're doing that forgiveness ratio that we talked about. There are, this came up a lot. A lot of employers were having trouble hiring employees, and there are some statutory exemptions to the forgiveness. You're not really penalized. The question, how I look at it is, I try to word this carefully, but it's no reduction in forgiveness if, because the situations apply, and it's very specific. They're statutory exemptions, and they read, the first exemption is if you can document an inability to rehire individuals who were employees as of February 15th, and you are unable to hire them, similarly qualified employees on or before December 31st, 2020. That to me seems like a wordy statutory provision that might not apply, but the new statutory exemptions are you have to document your inability to return to the same level of business activity as your business was operating before February 15th, 2020. Due to, if you're prevented from operating your business because of the requirements or guidance provided by, we'll name a government entity, the Secretary of Health, Human Resources, Director of Centers of Disease Control, or whatever your local health group is, they won't allow you to operate business. You just need to document that, and then you won't, the equation I'm talking about, you'll be exempted from that. Prior to the PPP Flexibility Act, which added these additional exemptions, you'll recall in the application for forgiveness, there were some exceptions. If you had a position for which you made a good faith written offer to rehire an employee and they didn't take advantage of that, then you can still count them as an FTE in your numerator. There was another exception. If you fired somebody for cause, or somebody voluntarily resigned, or voluntarily agreed to take a reduction in hours or pay, again, they still count as an FTE in your numerator in our calculations. Also, I want to be clear on this. I mentioned it briefly. When you calculate your forgiveness formula, if you fired somebody between February 15th and April 26th of 2020, you could still count them in the numerator in our formula that we're talking about. We'll call that the forgiveness formula, if you rehired them back by June 30th. Even though you fired them, if you hired them back technically on June 29th, you could keep them in your numerator. That date has been extended to December 31st. Again, it won't apply if your 8-week period has already expired or will expire prior to June 30th. But if you elect to go to the 24 weeks, the issue that we're confronting is, okay, does what if they fire them in October? So long as they hire them back by 12/31, it gets really confusing. I think I would, again, that's one of the things that I'm asking people to consider if they go to 8 to 24 weeks is what impact will it have on your ability to operate your business? None of us on the call thought we'd ever be in this situation 6 months ago. And so I don't know with any certainty what's going to happen tomorrow. This thing is very different. It's a lot. There's a lot of open issues to consider going forward. But as I guess the takeaway from the day is, just don't arbitrarily pick the 24 weeks because it may not be what's best for you in your particular situation. The deferral period, initially as many of you that have PPP loans will notice in your loan documents, there's no payments for 6 months. And that was a common provision. They would defer payments for 6 months, then after 6 months, you would have to pay fully amortized payments, principal and interest to fully amortize the loan 24 months after the date that the loan funded. Well, now with the PPP Flexibility Act, that deferral period goes from 6 months until the date on which the amount of forgiveness is remitted by the SBA to your lender, provided that the borrower applies for forgiveness within 10 months after the date of the covered period. In other words, you can't put off if you never apply for forgiveness and you make a payment, they won't just go on forever. When you have to apply for forgiveness or your loan begins to amortize 10 months after the expiration of your covered period, which is going to be 8 or 24. So at that point in time, you will determine, you'll apply for forgiveness, whatever date that you apply it upon the expiration of your covered period. Your lender will have a period of time in which to evaluate your situation and determine whether you're entitled to what forgiveness and at what level of your PPP loan. They coordinate with the SBA, and as soon as the SBA sends a notice back to your lender saying, yes, we agree, or no, we don't agree, there's some kind of determination, your deferral period, you don't have to make any payments. Now, if the SBA, the lender or the SBA rejects your application for forgiveness, in other words, you didn't strictly comply with the requirements that we talked about today about don't spend your money on anything other than the 4 specifically listed items, or you do something else that's terrible and wrong, that you should be able to get forgiveness. But for some reason, if you don't, then you have to now, beginning at probably the first day of the following month after that determination, although the regs say that day, so it just seems odd to do that, but that's what they say. But I don't know exactly how that's going to work, but you have to start amortizing the payment of the loan. Remember too, though, even though the PPP Flexibility Act for all loans after June 5th goes to 5-year maturity, if your loan was approved prior to June 5th, it has a 2-year maturity, and that's not an automatic change. Your loan is still due in 2 years. If you, for instance, are denied forgiveness and you have an outstanding PPP obligation, you have a lender, it's not required, but you can ask your lender to extend your PPP loan from 2 years to 5 years. Obviously, if your loan is forgiven, that doesn't apply, but the takeaway here is I don't want you to assume just because you read the Wall Street Journal or somewhere else that all PPP loans now mature in 5 years. That's only true for loans made after June 5th. So if your loan obviously funded before June 5th, don't assume that that's going to be, you've got to go to your lender and amend your loan documents to extend the maturity date. Here's something interesting, though. I did come up with this for you. If you're an employer borrower, it was deferral of federal payroll tax. The PPP Flexibility Act permits borrowers, to delay payment of your payroll taxes, even if all or a portion of your PPP loan is forgiven. Now, under the original CARES Act, borrowers were if your amounts were forgiven, you were ineligible for this deferral. And I think this is something that it's not getting a lot of publicity, but I think it's kind of important. So with the CARE Act defers the payment of the employer's share of Social Security tax on wages paid from March 27th through the end of 2020, which is a significant number. That it's a deferred tax liability. You eventually have to pay it, but you can pay it once that number is determined, X, whatever the number is from March 27th to the end of 2020. You just divide that by 2, and one payment is due on December 31st, 2021, and the second payment is due on December 31st, 2022. So whomever is handling your payroll or advising on payroll issues, and obviously depending on the size of your payroll, that might be a significant, between all of us, it looks like an interest-free loan, and I would take advantage of it. The Flexibility Act was also pretty certain about the June 30, 2020 deadline for new PPP loans. There is a new application out there. So if someone's on the call that hasn't already applied for a PPP loan, you have to do so by June 30th. And there was a new application form that was revised on June 12th. So make sure you use the most current form. I don't know what's going to happen. I've given up predicting whether that date's going to change or not. I have no idea. I would think, I don't know. I'm not going to even guess, but I just want to make it clear. The takeaway is it's June 30th, and there are situations where people have had EIDL loans, which are very confusing and are very different from PPP loans. We've been advising people to pay off the EIDL loans and get PPP loans, but you have to do that before June 30th. That option won't be available. I'm not going to go too much into EIDL loans, but there's no forgiveness component. You can use proceeds for more general working capital needs. The interest is 3.75%. It has an amortization rate of amortization payment over 30 years. I think there's a balloon, most of them within 10, but that's negotiable, I think. And those are secured loans if above certain dollar amounts. So there's a lot of difference in the PPP loan. Obviously, is an unsecured term loan, either at 2 years or after June 5th, 5 years. And the EIDL, the Economic Injury Disaster Loan Program, is kind of designed for something different from what we're experiencing here. And it is not, it works for some people, but you just got to be careful. Particularly, I'm not going to get into this, but I'm going to give you a heads up. When you go to calculate your forgiveness component and you have an EIDL loan that you incur between January 25th and April 3rd, the form is wrong. It miscalculates your forgiveness amount. They're in the process of fixing it, but it just creates, in my mind, unnecessary complexity. So talk to your advisors in your particular situation. It may fully warrant an EIDL loan and a PPP loan, but if you can just do the PPP thing, that particular loan program is a little bit easier to deal with. And again, obviously it's unsecured debt, which is something good. The update, many of you probably saw there's an article in the Wall Street Journal today. They had some of the facts wrong, but the SBA has approved about 4.6 million loans on the PPP program, which is pretty fantastic. $513 billion have been spent as of Tuesday. And I think our bullet thinks is 130, but it's right at 129, 130 million is still available for the PPP loan. There are some entities that have given the money back. A few weeks ago, there was a big controversy over, well, actually now a month, but on whether the certifications really, you remember the Shake Shack, the Ruth Chris, and the LA Lakers. Some of the people in the media were frantic that somebody would get a PPP loan. I don't know what and so they kind of shamed certain people into giving the money back. But again, the bottom line is none of what Shake Shack, the LA Lakers, and Ruth Chris were doing was not illegal. It was not wrong. It was just more of there was a PR risk, but there was nothing illegal about that. So if any of you have concerns about whether you qualify, the operative time is at the time of the application. I been working with a company that had never made a penny. they'd been in business for 2 years. They were struggling. Their lender was put a gun to their head, and then the coronavirus started, and they applied for a PPP loan, a rather large one, and they were awarded the loan, and they've made more money since the date of the PPP loan than they've made in their entire history of the company. They just went through the roof. So for all of you out there that have successfully navigated through this process, don't let somebody talk you out of it. You don't need to pay it back. There's no penalty for doing well, for figuring out how to deal with this unprecedented crisis. Carefully document what you're doing as you go through the process. But again, I go back and research the Wall Street Journals at the date that you applied, and every single day there's an article about how bad everything is in the world. And you just keep those. I can't believe someone can successfully argue that any business, even this very successful business at the time they applied, how would anyone know what's going to happen? And as I mentioned earlier, I don't know what's going to happen tomorrow. So some of you out there may have been concerned at one point about whether you were going to subject to the wrath of the government if you somehow successfully dealt through this. And I even had lenders try to talk people into paying it back if they were successful. And again, there's nothing in the law that says that if you successfully navigate through this, you have to give the money back or you should do anything different. So my advice is generally being, if you well document at the time you applied, then you should take advantage of the forgiveness component. Chris, I'm probably over my time, but I just wanted to go through all the things there. If I have additional time here also, if people, if you want to go through Q&A or however you want to do it.
All right. Well, thank you for that, Mike. Yeah, and we do have a little bit more time. So we're seeing on the C2FO side, we're seeing a few questions I want to raise up, and I've been trying to answer. I think the team too answer some by chat also. A lot of questions again on this webinar. So one is, I think this is just a clarification question. I just want to be super clear. The 8 and 24 week period starts when you get your funds, right, Mike?
Yes, it's the date of the funding of the loan. And that, again, as I mentioned, that's real important because your 8 or your 12 weeks, subject to the alternative coverage period exception, is a hard and fast rule. So you need to calculate it very carefully. And Chris, you're correct. It begins at the date the loan is funded.
Okay, and you just said 8 and 12 weeks. Is there a 12-week something? Or
excuse me, I'm sorry, 8 to 24.
Great.
I'm getting my multiples messed up here. It's 8 to 24.
All good. And so I think there's a number of questions, probably 4 or 5, where people are effectively asking this core question, I think, which is, let's say that my I applied for $35,000, was given the $35,000. And then 12 weeks later, I'm basically sitting on week 7, and I think I'll spend all $35,000 by week 12. I should elect for the 24-week period, right? Because then I have a higher likelihood of getting it all forgiven because it would be within the 12 weeks. You can't quite get to the 12 weeks and then apply for forgiveness. You have to wait until the end of the 24. It's kind of 2 questions there.
Yeah, but I think the answer is if you need additional time beyond the 8 weeks, you can elect the 24-week forgiveness period. If you have spent all of your PPP loan proceeds in week 12 or 13, the issue becomes, well, you can't apply. Now, let's say June 30th comes and goes. Some people will start applying for forgiveness after June 30th. You will not be able to do that until your covered period expires. It's not real clear in the forgiveness, but logic would tell me that they'll want to make sure that you're maintaining all your employees during the extended forgiveness covered period. And you also have to be careful when I think that answers your question. You can't apply for forgiveness until after the expiration of your covered period. The guidance that came out 2 days ago has a sentence in there that kind of says, well, the modifications to the covered period, 8 to 24 weeks, applies here, but it doesn't apply there, and it's really confusing. So when you go to calculate the forgiveness formulas that we talked about that originated in Section 1106 of the original Act, there is some confusion about what period applies. I would assume that whether it's 8 or 24 week, it's still going to be broken down to a weekly average. And maybe it's over an extended period of time, but it is confusing. But I think I would, in that case that you're saying, my thought is to go ahead and take advantage of the 24 weeks, especially if you put everything in payroll costs. When you go to apply for forgiveness, that is going to make it easier on you as a borrower. Your lender's going to look at it and say, okay, they met the 60-40 test. Actually, they spent 100% of it on payroll, or most of it. That's going to be great. Once you get over that 60% test, if it takes a couple more weeks, I think it's worth it in order to take advantage of the forgiveness component, which is tax-free. There's no income recognition on the forgiveness of debt.
Okay, and just to be ultra clear, you can't apply until your covered period ends, which is the 8 or 24 weeks. And so so I hear your hesitation around, because I just kind of figured everybody ought to just go to 24 weeks, but there's hesitation because what if you don't keep your employees through the covered period? Then you may have an issue around forgiveness, and obviously it's not clear, but that makes sense. All right, so on to some other questions. I think you covered this, but just to be super clear, the PPP does not prohibit you from doing other SBA programs, right? You could still take a EIDL loan or a 7A loan, and on, correct?
That's correct. And the reason that causes some confusion out there is you can't have two SBA loans. This is long before the PPP and the EIDL and all this other stuff. There's just a general rule regulation. You can't have two SBA loans for the same purpose. And the confusion came up with, that there is some overlap. The EIDL, which existed in the early part of March, it's mainly designed for areas of hurricane or specific parts of the country. It was never designed to go all over the United States at one time. But people were taking advantage of that in early March. And then when the PPP loan came around on March 27th, Friday night, there was enacted into law, that kind of created some confusion that, they're kind of overlapping here. You can have a PPP loan and separately an EIDL loan. If you had a PPP loan from January 25th to April 3rd, I believe, and then you subsequently applied for a PPP loan, you could increase your PPP loan. Remember we talked about 12-month look back, average monthly cost times 2.5. But you go through that calculation and then that number plus your EIDL loan, and you can fold them in together. That may be an option. I didn't like it, but the reason is some of what I was alluding to earlier about the forgiveness application makes it painful for you if you do that. And you jeopardize your forgiveness calculations are based off that larger number. And I don't like that part either. I want to keep my PPP loan in line. But yes, the answer to your question is you can have both in this instance. All that changes on December 31st when we go back to reality. So that's only during this PPP CARES Act covered period.
Yeah, and so to be careful, you wouldn't want to say that your EI, if you were to take an EIDL loan, you wouldn't want to say that was for payroll during your covered period, right? Your PPP loan was for your payroll, and your EIDL loan was for something else.
Absolutely. I mean, I think that's good advice. The usages, the permitted uses for EIDL loans are broader than PPP, but when you start, logic would tell me that you'd want to shift everything over and comply with the strict PPP rules in order to obtain the forgiveness component, which is not available in the EIDL. So everybody's situation, there may be situations where that wouldn't be true, but your logic is the way I tend to look at this.
Okay, so only a few minutes left, and apologies, we have we're up to 67 questions, so we'll send out some information, some additional information that I think is going to answer a lot of these. But I think there's some more kind of spirit of the law and type questions that we want to get through,
Hmm.
and summary ones. So the who's responsible for the calculations around forgiveness, right? It's from what I'm understanding, Mike, it's the borrower, right? The borrower has to keep the records. The borrower has to do the calculation. The borrower has to present those calculations to the lender, and then the lender just receives those and processes it, right? And there shouldn't be a ton of investigation and such. It's really just a borrower rep and then a lender acceptance and a passing on to the SBA. Do I have that right?
Yeah, essentially, Chris, that is correct. I want to remind everybody, we talked about earlier, the takeaway is, as Chris has described the reality of the situation. There's some guidance that basically protect the lenders in certain situations, but at the end of the day, if the borrowers that are out there listening, the burden of proof is on you to prove that you are eligible independently. You should be able to do that. Prove you're eligible. Certifications were correct. You calculated your loan amount right. You received X amount of PPP loan proceeds, and this is exactly what I used them for. And you got to keep those records. You could, in theory, your lender could grant you forgiveness. The SBA could grant you forgiveness at, between roughly a 90-day period after you apply for forgiveness. And then 2 years from now, somebody at the SBA could call you and say, okay, we want to look at everything. So you're going to have to keep those records for, I think it's 5 years. It's at least 3 years after you pay off loan, but I'm kind of recommending people to keep the records and to over document everything. Hopefully nobody on this call will be asked to go through a review. I have no idea. It's not going to be like a IRS audit. And for everybody out there, the only information the SBA needs, they'll ask for a lot of things if you do get selected for a review. Have whoever your legal counsel is, your accountants, make sure you only provide the information requested. Sometimes people have this urge to provide, they'll ask you for A and you provide A, B, C, and D, and lo and behold, something that the SBA sees and some of the additional information they didn't even request can create more of a problem for you. And Chris, one thing I wanted to tell that came out today in this article, it gave me cold chills. Most people on the call, if not everyone, is a private business. If someone asks you, your friend, your neighbor, anyone asks you whether you have a PPP loan, I would suggest that you not answer the question. It's no one's business other than with your accountant, your lawyer, and your lender, or anybody else that for some reason is relying on your financial statements. Keep it confidential. The people that are having problems here, it isn't like the SBA is out there investigating everybody and discovered these things. They're tips. And I'm willing to bet that if something happens to anybody on this line, it's going to be because one of your competitors called the SBA and said, hey, Joe Schmo over here is doing something inappropriate, even though you're not. But that's going to cause scrutiny. So the more confidentiality that you maintain with respect to the PPP loan, and in fact, if you read that article today in the Wall Street Journal, they were requesting people to call them so they could interview you in connection to what your PPP experience was like. Well, let me tell you, when you do that and your name shows up in the Wall Street Journal, I would suspect at some point you're going to get a letter from the SBA saying, hey, what about you mentioned this in an article, and we have a few questions for you. And you don't want that. So
That's
Chris,
good.
you've heard me say that 100 times, so I forgot to say it here. It's my usual.
It's good advice. You just don't want to bring that scrutiny, for any other reason. Even it's just going to be time consuming. All right, so we're at the top of the hour. I want to get one more in.
Sure.
We got a ton of questions on this on the last one. Has there been any clarity on affiliates and foreign ownership?
Yes, there has. There was on May 27th I think it was after one of our presentations, there was an FAQ that was listed out there. Originally, the issue was actually it was May 5th, but on May 5th, prior to that date, you just counted only your U.S.-based employees. So if you're a foreign-owned entity and you had 10,000 employees in Italy, but you only had 300 in the United States, could you apply for, under the affiliation rules, because you're more than 500 employees and you didn't qualify as a small business, things we talked about an hour ago. You didn't qualify, but you can, because under the PPP, if you had 500 or fewer employees whose principal place of residence, it didn't have to be U.S. citizens, principal place of residence was in the United States. And now, that was true up until May 5th. And then our friends at the government said, no, you got to count all employees. So, but if you made an application, if you were a foreign entity and you made that application prior to May 5th, you're okay. You can still go under the old interpretation. But as of May 5th, that you're subject to that affiliation rule, Chris. So you would have to include all your employees. If you're XYZ company, again, in my example, if you had 10,000 employees in Italy and 400 in the United States, now you have 10,400 employees versus 400, and you're no longer eligible for a PPP loan if you apply after May 5th, 2020. And for all those that are really into this, it's question 44 on the FAQ that was issued on May 27th.
Yeah, and that's a good segue into wrapping up, because what we'll do, we really appreciate everybody joining us. I think we ended up having almost 250 people that joined this afternoon. We're going to send around some more information, which also includes the FAQ that Mike was talking about there, which is really pretty informative and does cover a number of questions. I think one thing I will just recommend in terms of, that we didn't get to all the questions. If we didn't get to your question and you don't have great counsel, Mike is available to help with things, and we can put you in contact with him. But then also further, if it's something that you're just not able to get access to, and you're trying to figure it out on your own, I would read the documents, like the guidance and the application and such, just really literally. I think there's one question on here around paying employees that didn't actually work the hours. Mike, tell me if I'm wrong, but the way I would think about that is, look, it's a payroll cost, right? It doesn't matter that you didn't really get anything in return. You paid people for it. So, that's correct. And then to me, just use good faith, right? As general advice on this stuff, because I think, there's been a lot of rhetoric around these programs, and for good reason. As people like the Lakers got, it just doesn't make any sense. That's not the intention. For a $2 billion equity company to get PPP funds. So the intention is not to entrap the small guys, but rather to keep the big players from taking the money that was intended for smaller businesses. So we really appreciate you all joining. Thank you so much, Mike, for joining and for enlightening us here. And we'll send around some more information to try and answer more of the questions. And there's also, you can engage with your lender. If you don't have a lender yet, there is still time to apply. And we've partnered with Blue Vine to help us with that, because their experience is really strong. And they have a team. The last time I talked to the guy that was running it, Charles, they had a team of over 80 to answer questions like this. So you kind of get consulting along with it, and they've, all of those folks have, deep training in all this. So any final words, Mike, that you'd like to relay?
Not really, Chris. Good luck. Document. Remember, you have the burden to prove that you're doing the right thing, and I'm sure everybody's doing that. But the time you spent documenting and supporting your eligibility, loan calculation, and particularly your forgiveness, the better off you'll be. Start working through those forgiveness applications. They will change, I'll promise you that, but it'll also give you a good idea of what you need to provide the SBA, particularly your lender first and then the SBA, in order to achieve what you're trying to achieve, and that's much forgiveness as debt as possible.
Awesome. Well, thanks again, Mike. Thanks everybody for joining. We really value you as customers of C2FO, and hope to serve you for a long time. Thanks again for the attention. Take care.